One of my mottos is leave no trader behind. So in full transparency, I'm making this video to update you guys on some of my recent trades and my recent trade alerts. Now understand, some of these stocks that I'm going to show you, and I'm going to use charts to show you exactly how I analyze, still have a lot of room to run. So let's get right into it. Stick with me through the entire video, take notes, be prepared to make money, and let's go. Now, the first stock I'm going to talk about is CCJ. Let me pull it up. Now, I mentioned the stock in a previous YouTube video, and I announced it to my platform earlier in the week. So here's what I'd like you to see. I'm looking at the 1 month chart. Now, understand, before this run up here, that's when I gave out the alert at $20.50. So I'm going to show you exactly what I see so that you too can find stocks like that. And plus, I'm going to show you exactly what I see out of CCJ so you know exactly how high it could run because it's not done running. All right, so let's just look at the 1 year chart. You can see the stock has good upward momentum. You can see that it peaked out here before selling off a number of days. Okay, so the 3 month chart will analyze that a little better. You can see volume was dead. I wasn't in the stock yet. I had no clue what this stock was at the time until I saw the run up. Now, when I saw the run up in late August, early September, the stock ran as high as, I believe, $27. Now, as it was going up, you can see the last 2 days on 9/13 and 9/14, there was actually outflow and selling pressure as the stock was going higher. So that tells me, psychology of trading, the stock is headed down, especially if there's some downward momentum on the market. So I have this stock on my watch list and I'm watching it sell off for it looks like 9 straight days. So once it ends and we're on to the 10th day, the first day of green, it's almost like the first day of Christmas or something to that extent. The first day of green, you know that nothing goes straight up. So you have that first day of inflow. It tells me I'm almost ready. Now I've shared this with you guys before. After the first day, don't have FOMO. You don't chase on the first day that it looks like it's recovering. You say to yourself, now that I know it's going to recover, I'm going to wait for it to sell off 1 or 2 more days, and that will be my entry point. So as you can see, it was down under $21. At that point, I mentioned that $20.50 was a great entry price here. Now again, don't think you've missed out. I'm not done telling you where CCJ is going to. But let's say we got in at $20.50, which we did if you're part of the family. You had a couple up days, you're at $22. I mentioned that it was going to spike 10%, and it did. And we sold. Now, that was the first time we played with this stock. It was like October 1st. So it's still on our watch list, and I'm watching it consolidate for 1, 2, 3 straight days, because even on the 3rd day where there was inflow, you can see at the bottom, that was a terrible day in the market. So as the market was going down, people, institutions, big money, smart money were purchasing the stock. So that tells me, okay, again, we're looking for consolidation so we can get the best entry. And when I say consolidation, I'm looking for a red day. I'm going to simplify it. So right now, you know I'm looking for a red day. What happens the next day? It spikes. Oh my God, we missed our opportunity. Don't have FOMO. Remember that lesson because it will go back down if it's meant to be. If you miss the trade, you miss the trade. Now again, the good news is this stock is not done running. So 2 days, light outflow. You can see it. You see the volume was so light. I said this stock was going to pop. We got in and on Monday. Let's go to the 5-day chart. There you go. So we're in on October 11th. October 11th, boom, October 12th. On that morning, as if I wrote the script myself, the stock has volume and spikes to $23. Now, what did I tell everybody when I did the video about this stock? And if you see my old videos, you'll see CCJ is in one of the titles. I told everybody this stock for me has a price target of $27. I'm actually going to increase that to $28 right now. So you have my price target of $20. Now, not done. CCJ goes in the 5 days from 22 to a max of about $26. Now me, I sold at $25.04. I sold right about in Oh, we're still too high for me. Yeah, still too high. So there we go, $25.03. That was close enough to where I sold it. Now you'll see, I don't claim to be a genius in selling for max profit every time. I do my best to try and secure max profit, but as you can see, I could have sold at any of these other times and secured more money. But I made enough profit that I was happy and I was content. Am I done trading this stock? No, because right now we're at $25 up. Yeah, exactly even, $25 even. And I mentioned, in my opinion, this stock will go to $28. It might even go higher. Just because I put a cap of $28 in the stock, that's telling you where I'm going to take profit. So let's go and let's just look at it right here. Peaked here, and you can see it went up about $10 from the peak. So of course it's going to consolidate. It consolidated about $5. So I actually expect it to go up $15 from this point before the end of the year. So I expect this stock to be at $35 probably by the end of the year. But let's not get crazy. $35 would mean it goes up another 40%. Let's just take it a little slower and just say we'd be happy if it goes up another 10 or 12%. If it goes from $25 to $28. Sounds good to me. That'd be 12%. That would be 100% trade for my options. Calling yourself a winner, calling me a winner. Okay, so that was CCJ. I'm going to bring up another chart that we're going to look at. It's US QuantumScape. Now, here's the great thing about QuantumScape. I tried something new this week with my platform members. I told them I'm going to give them a stock or a trade the night before to look at. So on Sunday night, as we were entering the week, I mentioned QS. We'd be making money from QS on Monday. On Monday night, I mentioned we were going to make money on CCJ. I waited a day or two. I believe it was Wednesday or probably Thursday. Awesome. I hope you enjoyed the example of me showing you how to trade CCJ. Remember, I still believe it has 12% more on the upside. So let's look at my second example. I tried something new this week. I told my members of my platform the night before how we were going to make money the next day. So on Sunday night, I spoke about QS, and I'll bring up the chart in a minute. On Monday night, I spoke about CCJ. Later in the week, midweek, I spoke about Netflix and Netflix 10-minute rule. As soon as I alerted on Netflix, it went down. I bought Netflix at $6.24. You know, let's skip ahead to Netflix. Okay, let me pull up the chart for Netflix. All right, here we go. So Netflix had pretty decent volume going into this week. Right here, you saw couple heavy pops of demand. I guess it was towards the end of September, 29th, 30th, the 1st of October. Then it popped all the way to $634. Now, we weren't part of that yet. There was no us in there. I'm looking for consolidation. Remember, I like to look at 2 to 3 days of sell-off. So I saw consolidating, meaning there was inflow, yet it was going down. So 1, 2, 3. I'm getting interested. It's Monday. Its stock is at $6.27. Remember, I didn't get into the stock until Wednesday. So you say Monday, Tuesday, Wednesday. So Wednesday, I noticed there was extremely light volume, which tells me almost all of the scissor hands or paper hands are done. They're out of the stock. If you had a position and you were a larger institution or big money, you never want to be last to sell. So those who wanted to be out of the stock already sold. Those who are holding are still holding their bag strong. So I told myself, this is my position to get into Netflix. Remember, I only get into short-term trades. So I don't want you watching this video and say, this dude is bullish on Netflix. I happen to be, and I'll explain why, but that's not the case with every single stock. There's always a price target. All right, so Netflix, we have some outflow on the 13th, the day we got in. Netflix went down to $622 and change. Here it is. Yep, $622. I only remember because I got into Netflix here on one of these dips. So I got into Netflix actually on here, $624. I was attempting to call the bottom as it was a falling knife. I see it falling. I say I'm smarter than everybody else. I say I can call the bottom better than everybody else. So I get in at $624. What's worse is I send out an alert. Hey, Netflix, we're going to crush it. I paid $700 for my contract. it was the $630 strike, meaning my break even would be $637, which is what we hit later in the week. Understand this, as it's going down, I have three options. Number one, I can scare sell and accept the loss. That's not me. Number two, I can hold and wait for the rebound, and I would have break even. That's okay. If you don't have any more money to average down, you could do that. But if you don't have any money to average down, you're breaking one of my rules and you're not investing using strategy. So the third way, the only rule that made sense to me, is to average down. So again, as it's 624 here, I paid $700 per contract. It went down all the way here to under $4 per contract. I bought a bunch more contracts at $420. When it spiked the next morning, I exited out. I secured profit. When it dipped after the open, I got back in. Step and repeat. I explain this process to you in most of my videos. Okay, let's say you're still holding. You didn't get the memo. You didn't have the light bulb moment to step and repeat. You're still holding. Hopefully you average down. When it spikes on the morning or when it spikes even higher, hopefully you get out. If you average down, you're in for $4 or $5 like most of my lifetime members. Now we got a spike past $6, a spike past $6.50, and a spike to $7.50. So there's always 40%, if not more, to be made. Now let's talk about Netflix as a whole right now. Let's just go to the 3-month chart. 3-month chart tells you there is pretty strong support to about the $613 range, going up to $635 they were buying it. So when it consolidates like it's doing over 1, 2, 3, 4, 5, 6, 7 out of 8 trading days, it will find its new level. It hasn't yet. So by the time you're watching this video, I'm assuming Netflix is having earnings. If they have not had earnings yet, I would tell you stay away from the stock through earnings. You don't want to be in Netflix stock or options through earnings. Good or bad, you're exposing yourself with too much risk. So what I'd like to see happen is I'd like to see Netflix go down after earnings, maybe to the high $590 range, which would bring it right in here. And I would start buying because I do think Netflix is going to $800. So again, prediction, Netflix going up to $800 next year sometime. It's at 600, that would be a 33% gain. That's good for a year. In the short term, I would not be surprised if Netflix comes back down to this level right here and fills this mini gap here at 612, at 610, at 608, especially with earnings coming out next week. So I'm gonna flip the switch. Next week, I might actually talk to my platform and suggest we might take a gamble and go with some Netflix puts before earnings. Now, when I say take a gamble, I don't mean buy 5 or 10 or 20 contracts. I might be one contract. I might buy one contract, put in maybe $250, have it be way out of the money. So if I'm right and Netflix doesn't beat on earnings and fails, the stock can lose maybe 10%. And my $250 investment might be worth $600 or $700. So that is my strategy on Netflix. I would rather be on the sidelines, but if I had to play, I would buy one put contract right before earnings and keep my fingers that they will miss earnings yet again, as they've been known to do. Thank you for joining me for another winning recap. Remember, stay with me, learn with me, and grow with me.